right. Hello, everyone. As usual, we give it out 5 minutes so everyone can join, and we can just wait for everyone. So before we start, guys, just say risk disclaimer here. Read through it, and then we're going to move on to the next slide to cover what we're going to be looking at this webinar. It's a very, let's say, very chill week ahead. We still have NFP on Friday, but it's a very slow week ahead. But just make sure, do you guys hear me? Can you guys hear me all right? Is everything good? Can you just send me a message on the chat? And then we can move on. All right. Let's see. I see some new name here. Mapo Green Motoseo, welcome. I think it's your first time here. I've never seen you here. Team Peter, I haven't seen you here as well, so welcome. For Jason's iPhone, maybe I haven't seen you here as well, so welcome. So it's really good to see a lot of people joining us and having, some good time together. Thank you guys to be here. All right, let's go. Let's move on. So first, I would like to move on to the next slide. And we can see that what we will be looking in today. I try to keep it simple as possible for today. As everyone knows, it is a very chill week ahead, but still we're going to be looking at the economic calendar and the look ahead for the week. So majority of the volatility from this week will come from the non-farmer payroll from USA, as well as today Euro CPI. So we have Europe CPI, Eurozone CPI today at 7 p.m. in Sydney time. That will be likely sparking some sort of volatility in the market, especially, of course, on euro dollar, euro pound, and euro yen, and etc. Then afterwards, we're going to be looking at some opportunities that are presenting for the week ahead. I'm looking at some opportunities on euro dollar. I'm looking at some opportunities on gold as well, and a few other pairs that we're going to be looking all together. If you have any questions, then on the wrapping up, I will be answering all the questions. So, there's some people joining us. Let me accept them here. Perfect. So the wrapping up and answering some questions. So all the questions, exactly all the questions, will be answered in the end of this webinar. So in the last maybe 10-15 minutes, if you have any questions, please note it down and send it on the chat. Okay, don't be afraid. Don't be some people think that asking questions is dumb. It's not. It's the best opportunity for you to actually have a one-on-one with me, let's say, not exactly a one-on-one, but still having a one-on-one answering. I will be answering your question the way you like me to answer. Okay, so again, NFP, we're going to be looking at the economic calendar. We're going to be looking at the opportunities for the week, and then we're going to wrap up answering some questions. All right, everyone good? Take your notes, notebooks and pens, and let's start it. Okay, let me get out of here. Perfect. All right, so I will be using, of course, FinLogic's economic calendar, the best economic calendar out there. I'm not joking. This is, in my opinion, the best economic calendar. You can check data back to all the way down. So let's go into tools, economic calendar. It's very easy to find as well, guys. So you can just finlogics.com and then click enter, and you will be here on the first page, all right? And then clicking on Tools, Economic Calendar, you will be guided to this economic calendar. Perfect. So let's go and select this week first. We started on Monday on a very, actually, not bad start, okay? We even had some movements happening on euro dollar, especially. We saw euro dollar going all the way up to 1.12, and then now coming back to 1.11. If I'm not wrong, yeah, 1.1134. Just here on the side, you can check it. See, it's perfect. It's literally perfect. You have everything in one platform. Okay, so and then we saw all of these moves happening on a Monday opening, right? So pretty decent move happening. All right, so we had as well Japan retail sales. And why Japan retail sales is important? Well, it wasn't important a few months ago when, let's say maybe 6 to 7 months ago, it wasn't that important. It didn't have that importance as it has right now. But it leads to inflation. Retail sales occasionated tends to occasionate inflation onto the economy. So think as it is. You have your money, you go and you spend your money on, I don't know, buying some clothes, buying a car, buying an iPhone on JB Hi-Fi or etc. You are fulfilling the spending into the economy. So therefore, you don't mind how big the price is. You just buying and buying and buying. Because if you look back 5 years ago, before COVID, we had a different way of pricing things. Maybe a cloth, let's say a t-shirt, was costing $5. Now with the increase of inflation and rates, the population is paying $10 on a t-shirt. So pretty much 100% up move on the price. This is not actually what is happening, okay? But it's just an example, guys, to make everyone very clear on that here. Okay, so on Japan, what they're trying to do is they're trying to bring inflation up. So then they can raise the rate higher because Japan has been on negative rates for more than 30 years. And on 2 months ago, they decided to increase 25 basis points. And once they've done that, they've assumed that inflation would be coming higher. But in essence, it's not coming higher. It's actually flattening. With those Japanese retail sales coming higher than expected, it's making the Japanese yen more stronger because the market is believing that we have a chance to continuation of upcrease on the rates. Higher rates means more money getting paid on fixed rates on your savings account. So let's say here in Australia, just an example, we have a 5% rate set by the central bank, okay? It's just an example. Your savings account will be probably around 4.75 to 5% a year, giving out no risk, right? Pretty much no risk. Now, if you go to an emerging market, an emerging currency like Brazil, Brazil's paying, I think it's 13% per year. So 13% per year is what investment funds are trying to pay for the clients with some risk, okay? But the reason why in Brazil is higher is because the inflation is higher, and it's because, of course, comparing Australia to Brazil, Brazil is much more risky country on the economy side than Australia. Australia is much more stable economically than Brazil. Okay, so enough talk already, but talking about Japan retail sales year over year, it came in higher, 2.8% from the forecast of 2.3%. So indeed, this is a good release for the Japanese yen. All right. Now, moving on, we did add as well China manufacturing PMI for the month of September and the Caixin services PMI as well. All right. So for the manufacturing PMI for the month of September, we did have a upcrease from 49.1 to 49.8, so 0.7% higher right here. And why I say that Finlogics is one of, it's the best economic calendar out there, it's just because, let's say, you want to have a look in depth about this economic release. So you can just come here and click on it, and we'll open a new page talking about what is the China NBS manufacturing PMI. So in China, the Caixin manufacturing PMI Purchasing Managers Index measures the performance of the manufacturing sector and is derived from a survey of private 140 industrial companies. And then it goes on. But the nicest thing here is that you can actually see what happened on the release of the whatever news you may be looking at, or whatever data. So let's say this one is the China NBS manufacturing PMI. You can come down here on the market impact data, and then you can see that US dollar against Chinese yen on the 60-minute movement after the previous release was right here. You can see this little arrow pointing up. So that is right here, the release, 11:30 a.m. on the 30th of September, Monday. It made the Chinese yen weakening, all right? And we can see right here that if it was a strengthening, then we know that it could go down and not up, all right? Well, coming back, just showing some good features about Finlogics. I love this feature, actually. I use most of the times on my blogs. If you guys follow my blogs on a daily basis from ACY website, I highly recommend you to do that. It's free. So, and then we had as well yesterday the German inflation rate month-over-month and the year-over-year, the preliminary. But still, it's very important, okay? We were expecting 1.7%, and it came up to 1.6%. And that's when the euro lost a little bit of strength, and it came back down to the levels where the price is at the moment at 1.1134. 1.1135. So we were looking at a consensus of 1.7% and a actual came in at 1.6%. So what can this shows to us? This is pretty much showing to us that inflation is decreasing on Europe, or do you think that inflation will be heading back up again? Well, in my opinion, as I always say, Germany is the biggest producer, the biggest manufacturer producer in terms of technology, but yet manufacturing of vehicles, all right? So where is BMW from? German. Where is Volkswagen from? German. Where is Mercedes from? German. So the majority of the big manufacturers are on Germany. So yes, it is a big a big release for the inflation from Germany. So we always have to pay attention because Germany does have a huge portion around Eurozone. And we do have, as we're going to see right now, where it is, Tuesday. Well, it's not here. I was supposed to be showing here. Oh, there we go. Sorry. I wasn't looking at down here. There we go here. So we do have today at 7 p.m. the euro inflation rate year over year. It's the flash one, but still it's important. Okay. If we come back up and we look at the German inflation rate, they were expecting 1.7% from previous 1.9. Okay. And it came back to 1.6. So if we actually click on it, see, this is so good. We can see that the previous 1 year, so since September October now, last year, but this release was from September 30. So it's from September 2023 to September 2024, so last month. We can see that majority of the actuals came in lower than the forecast. Okay, so the actual here is on blue and the forecast is on green. So the forecast, the actual came in lower, lower, equal, lower, lower, equal, lower, equal, lower, one higher and then lower and lower. So German is on a descending of inflation. And what this shows to us that Eurozone may be decreasing on inflation as well. And why do I say that? It's because, again, the portion of the Eurozone that takes German is huge. Whatever happens then on German may happen back to Eurozone. So if we come back to the economic calendar and we click here on an Euro inflation rate year over year, the expectation is at 1.9%. Okay, and it's a year over year. So a little bit more messy here, but still we can see that the actual is somewhere between 50-50. So actual came in below, below, same, higher, below, same, higher, same, higher, and then same. What I'm expecting from Eurozone is a lower to somewhat as expected, as forecasted. So if the forecast is 1.9 at this instance, as we can see here, I'm expecting somewhere between 1.9 to 1.8. Okay. The reason being is, yes, the people on Europe is sort of having more money to spend, yes, in some instance, but they are not doing it. Why? Because, in my opinion, what I think is from the last ECB that we have, European Central Bank meeting, that Lagarde came in and actually gave her speech. She said and she mentioned, she did very, very clear. We are cutting 25 basis points, but this doesn't mean that we will continue to cut. So, and then it comes to my mind, another thinking as well. If they're not, committed to a rate cut F, that pretty much shows to us that they are not expecting inflation to go lower soon as we may be expecting. So, it makes me thinking, should this inflation be higher and then in the next meeting they're going to pause? Or should this inflation be lower and then in the next meeting they're going to cut another 25 basis points? All right. So in my opinion, I do believe that we may see a lower inflation here, somewhere between 1.8 or as forecasted. Okay. And that is today. So if we have a lower inflation on the Eurozone, we can see euro dollar trading lower than 1.11. Okay, right now, euro dollar is trading at 1.1135. If we see a lower here, I'm talking about 1.7, 1.6 at year over year, then yes, inflation has come back to target. The only problem here is the core inflation has to come back to 2% now. Yes, because we do have the release as well of the euro area core inflation. And that's the most important, okay? It's not marked as 3 stars, yes, and it won't be marked as 3 star because this is what generates more volatility. But this is what the central bank looks at, all right? So, and we can see that, yes, it's coming down. It was all the way from 4.2% now to pretty much 2.8%. And the forecast is continuously to 2.8%. All right. So they are not expecting any changes in a sense. Let me just confirm. Yeah. So they're not expecting any changes from 2.8 to 2.8. And if these guys here come lower than 2.8, let's say 2.6, this would be enough already to fulfill a drop below the 1.11 from euro dollar. All right. My expectations are, yes, I can see that inflation is decreasing, but I just don't see the population spending decrease. And we're coming to Christmas. in the last quarter of the year. So yes, first week of October, well, first day of October, and we will have more people spending. Okay, let me give a sip of my coffee here. All right. Wow. Still people joining us. So good. Nice. Okay. Let's go ahead. So tomorrow, Wednesday. Of course, it's going to be very important as well. We're going to have the release of ISM manufacturing PMI and the manufacturing employment. But most important is the manufacturing PMI for September and the job openings. And this is going to show to us how many jobs have been opened in the month of August. Okay, so they are expecting 7,670,000 job openings for the month of August. If this comes lower, therefore they were wrong, and this will occasionate a weakness on the US dollar. And then consecutively making any pair with XXX/USD going up, and USD slash XXX going down. All right. Okay. The manufacturing PMI is very important. All right. I just want to touch base on this one first before we move on, because see that it's below 50. So let's have a look on that. I prefer to look at the line chart on this one, and I can put on a 5 years. Let's put an O. Let's take off the forecast. So let's just work here with the actual chart. See that the maximum they've reached was 64,700 in 2021, but right before in 2020 we've seen the below the lowest point at 41,500. Okay, so the range between here is 41,500 to 60,400, right? 64,700. And right now we are below that range. We're below the middle of the range. That was somewhat between 51, 52. We are trading at 47,200. So if we continue to have a manufacturing PMI coming lower, okay, what does this indicate to me? I'm going to let some people think about it and send an answer on the chat. Let's see if you guys sort of get it where I'm coming from. Let me just see. So if we have a lower manufacturing PMI, what can this affect into the economy? What else, what sort of data this will affect into the economy? It starts with G. That's a big hint. And it ends with P. GDP, that's correct. So the gross domestic product would be affected. The reason being is if there is no production, if there is no manufacturing, therefore we're looking at a lower GDP, lower gross domestic product. So think about it, right? You have a business and say that the GDP is like your sales and you are manufacturing pens. You have to sell those pens. If your manufacturing is going down, then your sales are going down as well. All right. So in very simple terms, if the GDP comes lower than expected for three months, so a whole quarter, we can call it as a technical recession. And we may be very soon happening on the USA. So I would highly pay attention on these 47.5% here. If it comes below than that, we can see some weakness on the US dollar. All right, so moving on from Wednesday. There we go. Perfect. We have Japan consumer confidence, and that's pretty much it. And then, of course, Thursday we have Australian balance of trade, the month of August. Very, very important to pay attention on the BOP, right? The balance of trade. Sorry, BOT, balance of trade. That does change the BOP. That's the balance of payment. But we're looking at lower than the last month of lower than the month of June, July, August, June. Well, anyways, so we're looking at below that. So yeah, so we may be looking at 5.8 billion, okay, and that before was 6 billion. So if it comes at 5.8 billion, yeah, good. If it comes below, bad for the Australian dollar. And now, the one and only that everyone wants to know. Someone sent me a question. Let me just, oops, sorry, wrong one. Let me just have a look here. So Green asks analysis on JOLTS. I've done an analysis on JOLTS, but I can do that again for you later once I finish the NFP. So the employment rate. Okay, so one thing before we even start talking about NFP here, you guys need to understand something. And I always say the same thing. We have the NFP, that is the actual NFP, the non-farm payroll. But it's not only the non-farm payroll that is important. We need to have a combination of three things: non-farm payroll, unemployment rate, and average hourly earnings. Okay, these are the three main ones that you should be focusing when the release of the NFP happens. So let's say we have a high NFP, a lower average hourly earnings, and a lower unemployment rate. It's going to be all over, all right? And it tends to be high volatility on those moments. But when it's everything going to one direction and another direction, it's not only in one direction, then it's pretty much not going to have much, how can I say that? Not going to have much, I would say direction, and we're looking to trade direction and not volatility only, okay? So on the non-farm payroll, we're expecting 140,000 from the previous of 142,000. It's a 2,000 less than the previous, yes. But in my opinion, to be very honest with everyone, we may see higher numbers here, all right? But again, it's not only the NFP, the actual NFP that counts in. We need to have a look at the unemployment rate. And just remember that the unemployment rate forecast was updated from FMC on the last meeting that they had on last week. Well, 2 weeks ago, sorry. They were saying that, yes, it is 4.2% at the moment, but there is an expectation of an increase that can happen. There's a bend, all right? There's a bend from 4.2% to 4.4%. So the 4.4% would be the maximum that they're expecting. The 4.2% is the lowest that they're expecting, at least in this year. So don't expect anything below 4.2%, okay? As the Fed actually said that we're looking at 4.2 to 4.4%. We can have lower for some reason, yes. I'm not saying that it's not impossible, but we may have higher, or we may just have as the same, but more as to higher and to the same as expected. And last but not least, so we finish up the economic calendar. The United States, USA, sorry, average hourly earnings, we have at 0.3%, so decreasing. These, of course, fulfill the population to spend less, okay, because they're getting paid less, and less people are on the workforce. So if there is less people on the workforce, then let's say you live on a house with 4 people, mum, dad, and 2 childrens, 2 adults and 2 childrens. Those pretty much have a, depending where they live on USA, they can have higher costs of living. So let's say a $5,000 cost of living per month with rent, food, and everything, electricity bills, and etc. Those people will be counting some money for the next quarter because the average hourly earnings will be going down, and then we come now to the question that Green have asked during analysis on the JOLTS. If we look at here, the JOLTS are at 7.67 million. And if the JOLTS are coming lower, therefore people are having less jobs. But the opportunity is there. Okay, so now I'm answering your question, Green. Once we looked at the FMC that we had on 2 weeks ago, the Fed, the Jerome Powell have been making very clear that he doesn't think that we're going to have a recession or anything like that. So the month ahead will show us, okay, that this whole month will show us. The month of October will be a tough month for the market. I believe so, especially month of November. December, we may see some direction, but this quarter will be decisive for what they will be doing ahead on the rates. But I do believe a lower job opening is just because it doesn't make any sense for me, right? So if the jobs are 7,670,000, why is there less people working from the previous month that they are forecasting? Okay, so it just doesn't sound, let's say, supportive for me. So yes, I'm expecting a lower JOLT for this month. Okay, for the month of August, but for this release. Well, I think this is pretty much it from the economic calendar. We have on Saturday at midnight the Canada EV PMI expected to be 50.2 from the previous of 48.2. So I think that's it. Pretty much I've covered every little thing here on the economic calendar. Does anyone have any questions about economic calendar, or can we move on? Just gonna wait for everyone to answer. No questions. Okay, that's good. Clear. Thanks, Fitz. Perfecto. All right. Look at Aussie dollar. Look at how he goes. Okay. Yes, let's go and talk about Euro dollar now. Let me zoom out. Oops, sorry. Okay, so we've seen, I've actually made a video today talking about Euro dollar, and if we go to the 4-hour chart, it's clearly to see that we are on a consolidation at the top. NFP for Friday giving very mixed signals. Yes, I do believe on you on that, Green. So right, as I was saying, we can see that we are on a consolidation area somewhere between here, and it much clearer when we go to the 1-hour time frame. And what I was talking about, if we have a stronger NFP or stronger JOLTS, is that we may see a breakthrough the 111,200. That is this support area that has been supporting 3 times already. I'm not looking to trade Euro dollar higher, okay? Just because of the release, first of all, of the CPI in a couple hours. Well, in 1 hour and a half. But I'm looking to target Euro dollar somewhere between this level here, 1.1011. Okay, 1.10. Actually 1.105, sorry. Yes, good. So if we look at the whole market, we've seen pretty decent move to up to 1.12, where we are trading right now. But if we see a break below 111,200, we may see a take profit at 1.1015, right? This would be with a lower CPI from Eurozone and with a higher NFP and jobs opening. Okay. Now, moving on, I think we do have an opportunity now on gold as well. Lots of people, I've made a video on Friday or Monday yesterday. I've made a video talking about when is gold pulling back, right? Because we've seen some huge moves on gold since beginning of last month. This is the 1 hour chart. Let me put in a 4 hours so everyone can see how big the move was. Okay, perfect. All right. Sorry guys, my mouse is not good at all. Okay. So there is always what I always say, okay? Sometimes it can work for gold, but I don't trade much gold, but I'm looking at an opportunity for pullback, okay? I do believe that we have a change of character on top of this breakthrough to the top and then come back, break to the bottom, and now coming to retest somewhere between here and coming back to the levels of 2,600. Okay, 2,600 here. So it is a very small trade, but I still believe on a higher gold price until end of this month. So yes, it is first day of October, and I will remember that on the 30th of October. I don't even know what day this month goes. I think it goes to the 31st. Yeah. So until 31st of October, I do believe gold can be trading somewhere between 2,750 to 2,800. Okay. So I don't think gold will pull back soon, especially now with China and China giving incentive to to the economy, as they know that they're going to fail, they know they're going to get on a recession. We've seen China giving some stimulus to the economy, let's say, lending out some money to people, so people could buy stocks and etc. Anyways, and that of course occasionated Australian dollar as well to go lower, to go lower. Sorry, to go higher. AUD USD. Perfect. So, and just now it's coming back, but again, I don't believe that is sustainable. Okay, this down move, I don't believe this down move is sustainable, because when we look to these, we don't have much targets, we don't have much boxes where I usually target. This is my strategy, so you may have a different strategy than me, and it's completely fine. But what I'm saying is, from my perspective, we are trading on a range again on the top here, and we just don't have any targets to the bottom. But if we look to the upside, well, we do have one over there, but at 66,600. But I do believe in more continuation to the uptrend. Now, moving on to USD JPY. USD JPY was very crazy last week. We had actually, let's move on to the 50-minute. I want to show you guys something. Okay, somewhere here. Perfect. So what do you think about CHF now that they have the rate cut last week? I will answer your question, Sweets, in a second. So we had this move on a Friday, I think it was, on a Friday, yeah. So we had this move on last Friday, and I was actually sitting down on my chair, and I didn't realize that something was happening on USD JPY, but one of the traders at the trading floor, he had his screens on USD JPY, and then I was like, oh, what's that? What's happening there? And then he was like, oh yeah, USD JPY. I was like, oh my God, yeah, that's pretty heavy moves for Friday. And the reason is because at this time, exactly at this time, when you see the candles going up crazily on the 15-minute chart, all the way from 145 down at the bottom here to 146 400, so 140 pips in less than, let's say, 30, 1 hour, 1.5, 2 hours and a half. In less than 2 hours and a half, we've seen 140 pips move. But we didn't much know, the market didn't much know what was happening on the Japan LMS seminar that they host, if they're going to be more hawkish or going to be more dovish. And then, you know, some people were believing on a more hawkish, some people were believing on a more dovish. And therefore, steps in weather, and he's like being the hawkish as possible, and then it makes Japanese yen just do this. And then and now it's coming back for a pullback. Of course, you know, people that short it all the way on the top at 146 or 146 400 even are taking profit. So therefore I'm expecting a continuation to the downtrend, most probably next week or so. Of course, the things that are moving USD JPY is the Bank of Japan, is the releases, is the data. But for this week, I do believe on NFP moving the market. Okay. But we may see a pullback somewhere around 145 and then a continuation to the downtrend. What else? USD CHF. Okay, perfecto. So that's the 1 hour. Let me just, yeah. So I had a trade open it on USD CHF last week that the SNB, the Swiss National Bank, have cut their rates by 25. And even, you know, we hit take profit on this trade. We opened the trade on here, stop loss on top here, and take profit down here. We hit take profit on that. So that's pretty good. It's decent trade. But Sweets asked what I think about the CHF now that the SNB have cut the interest rates. I continue to believe on a very paced move on USD CHF. If you ask me, USD CHF in specifically, we won't see like much things happening on like strengthening or weakening. We may see just a consolidation as they always has been. Okay, now if they continue, the Fed continues to cut 25, 25, and or 50, even 50, as some people are believing, then we may see CHF gaining more strength, because the last money that is resting on US dollar will be moving to Switzerland, because then we all know that the Fed is over and that we can already start moving money around for Japan, Australia, even Australia, with RBA being very hawkish, China giving some stimulus to the economy. We may see some things happening. All right. Okay. I think that's pretty much all for today. So CHF JPY also is looking promising for downtrend. Yeah. It may be. Could you check real quick? Yeah, I used this CHF JPY. HF JPY. Yeah, CHF JPY. The problem here is, again, is the JPY. I don't, well, not that I don't trade, but I'm not looking to trade Japanese yen at this moment, just because of the you know, the confusion that it may be happening on the Bank of Japan. You're saying on the 1 week time frame. Wow, that's huge. Let me have a look. I have more data, but I don't think Yeah, I do believe more on a, let's say, 1 hour time frame. So if you want to trade, let's say, into next week or for 2 weeks, then I would likely to trade on the 1 hour time frame. But yeah, we may continue to see. It's just going to depend on what's going to be the next release from the Bank of Japan. But yeah, if we can continue to move something like on those lines, we can break through the 168 to 300 and do a continuation to somewhere 166, 500. Yes. All right, guys. So sorry, let me just change my screens here. This one here. Okay, let me share my screen again with everyone. Where's Zoom now? There you go. Here. Oh, sorry, wrong one. Share screen. Share. Perfect. Okay, and so we come to an end. So we've had a look at the NFP that I'm expecting it to be higher than expected. We had a look at the Europe CPI, Eurozone CPI in 1 hour. We're going to be the release. I'm expecting to be lower. Looking at some opportunities to short Euro dollar, long Aussie, long gold, and some others, and answer everyone question. All right, that's it for today. Have missed it, but what's the bias for euro in an hour for the CPI? Yeah, for Eurozone, as I just say, looking to a lower CPI over there. But what's going to be important is the actual core CPI that we have to pay attention, that they're expecting 2.8 from the previous 2.8, so no changes, but it would be great to see lower than 2.8 there. So yeah, just, continue to have a look on the core CPI is more important than the only preliminary CPI. All right, guys, thank you so much for today. I hope everyone have a beautiful week ahead. I will see everyone back on Thursday. And if you have any questions, please just send it on the Telegram or on the comments from YouTube channel. All right, all, thank you. Take care, and I see everyone. Ciao, ciao.